Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me is my co-host, CoinDesk managing editor of Global Capital Markets, Lawrence Luton. Good morning, Lawrence.
Good afternoon, Christine.
I love it. I'm in Barcelona, and Avalanche Summit is wrapping up, so it's been a pretty eventful week, and let's check in on Bitcoin in the meantime. Taking a look at Bitcoin, the CoinDesk Bitcoin price XVX index currently at $44,840. Bitcoin is up about 4.6% over the past 24 hours. The CoinDesk Ether price ETX index is at 3181. ETH is climbing about 5.4%. The DFX CoinDesk DeFi index is at 281, also rising about 3.9%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as leader in crypto news, events, and data. A lot of green across the crypto markets right now. Markets are doing quite well. And first of all, perhaps you could comment on that, Lawrence, but also I want to point out later on to eagle-eyed finding that you found with Circle, but go ahead.
Yeah, look, I mean, there are very few things going on in the market, except one thing is kind of getting people excited, if you will, about Bitcoin, or at least it's a thing that's being talked a lot about in the crypto markets, and that is the use of Bitcoin potentially in the reserves of Terra, Luna, whatever you want to call it, as essentially being
billions of dollars worth.
Yes, about $3 billion worth of Bitcoin that could help shore up the value. Yes, the goal is 10 billion, and so it's the idea is that this might shore up the value of the stable coin. But we'll have a guest on soon, and we're going to discuss that a little bit further. Because it's
meanwhile, I also mentioned your eagle eye. So you saw that Grant Thornton, an accounting firm, had switched from calling stablecoin Circle's 52 billion reserve accounts from correctly stated to the more equivocal fairly stated. And tell us why that matters.
Okay, this was a really weird story in the sense that the whole thing was just a very someone had said, look, there's been a change somewhere in these attestations that Grant Thornton puts out. So attestations aren't audits. They're basically snapshots. And I'm using really, really broad brushstrokes here to describe what an attestation is. So it's like a snapshot of what is on the balance sheet, and the Grant Thornton, being the accountant that's looking over the books, is saying, this is what we, the data that they provided matches with the assets and liabilities match, et cetera. And so we're, this is as far as we can tell is what's going on. Now, if you use the term correctly stated, you got to be not just really precise, but something the accountants just never use that term. Yet, since November of 2018 or so, Grant Thornton has been signing off every month with the term correctly stated. Now, there are a bunch of new standards that are going to be put out in June when it comes to attestations. And so the Circle said, look, well, they changed their wording to fairly stated because that is more in line with that wording. However, that's always been what's the wording that you should be using is fairly stated. Correctly stating is not a real term in this situation, and it might open up to legal liabilities, but also the issue. Yeah, there might be legal liabilities, but there's also the fact that Grant Thornton, which is looking at this asset base of 50-something billion dollars and putting out these reports every month, somebody there saw the words correctly stated and said, sure. And they put a stamp on it, or they weren't looking carefully at what their own name was on, and it sort of calls into question the quality of the attestations. Because if that is something that an accounting firm of that size, one of the big four, is signing off on, and yet it's the wrong terminology, something basic, and we interviewed a bunch of accounting professors, and they said not even their first year their freshman accounting students would have done this. It's right. Really questionable. It should make a few people, at least looking at this, I'd be a little bit nervous.
Or they need just to hire you to proofread their documents or do their due diligence, Lawrence.
No, they can't afford me.
So, speaking of stablecoins, Terra Luna is in our spotlight.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
The Luna Foundation Guard is said to be preparing to buy $3 billion worth of Bitcoin to introduce a new BTC-backed reserve UST stablecoin. Terraform Labs co-founder Terraform Labs co-founder Do Kwon saying the eventual goal is to buy $10 billion worth in BTCs. Joining us now to discuss is Darren Lim, research analyst at blockchain analytics platform Nansen. Hi, Darren. Thanks for joining us. So taking a look at EtherScan data, it's showing that there have been 4 $125 million transfers of Tether that was moved out of a Gnosis Safe address thought to be associated with Luna into what appears to be a Binance address. So can you walk us through what's going on here?
Right. So I think what's happening, at least based on data, right, is that all of the Gnosis safes, as well as the signers of the Gnosis safes, all of them with Ethereum by the wormhole deployer. So obviously, then we know that this wallet is connected to the wormhole and likely to the LFG or Luna Guard Foundation. So I think what's happening now is that Do Kwon, the founder of Luna or the founder of Terra rather, is obviously pretty going ahead with what he said he plans to do, which is to sort of increase the reserves or stack the reserves of the LFG with some BTC. So I think what's obvious is that some more stable coins are going to be transferred to centralized exchanges, and then the purchases is going to be made, or it could already have been made, over the past few days. As you mentioned, a lot of the money has been transferred.
And why do you think that this is necessary?
Yeah.
Do you think it will make Terra Luna more stable?
Why do I think this? Do I think this will make Terra Luna more stable? I think a bit, right, which is and then make the Luna more stable. But I think what's more interesting is also why he's so public with this. So I think he tweeted pretty early on interested to do this and interested to stack the reserves with BTC. And we can see, he has had quite some waves on Twitter. So I'll be interested to see how, to see what sort of effect this has on the market. Not just but maybe the rest of this week, and even up to the end of the year.
So Darren, I have to ask you this because this is a little bit, it seems like there are people within the Luna community who either are mischaracterizing it or not understanding it. And that is this. Some people are, Darren, are you there? It seems he might have frozen. Oh, he's there. Great. So it seems that, are these Bitcoin actually backing UST? Or, my understanding is this, is that if the price goes down below 98 cents, if the price of the UST goes below 98 cents, people can redeem that essentially for Bitcoin, 98 cents worth of Bitcoin. The idea being that would essentially be the floor, if you will, provided that they don't use up all $3 billion worth of Bitcoin. The idea being that that they're not going to deplete that reserve. Nonetheless, there are people within within that whole Luna community saying, well, it's not really backing UST. It's just it's a separate fund, and it works differently than if it backed it. It's a separate idea. Can you elaborate on that?
Right. I would say that I'm probably not well versed enough to cover it. But what I know is that USD and Luna they work together like a synergy model, right? And then you can burn Luna to mint more UST, and then you can vice versa. So I would say I'm not 100% sure of how this whole reserve backing is going to work specifically for UST and BTC. What's the relationship? But I believe, like the LFG, right, the Luna Foundation Guard, obviously has a very strong vested interest to make sure that UST is backed, and then to ensure that UST runs really well. So that's all aside. That's what I would say about the topic. So I'm not 100% sure on whether I can comment, on the asset relationship. Yeah.
Yeah, and I think the people in the LFG are themselves. There are people in the LFG who are characterizing as if it seems as if it is a backing of UST. But if that is the case, and you have a volatile asset in the asset base that is backing the stablecoin, and that stablecoin is then used to buy volatile assets such as Bitcoin itself, almost sounds like we're hypothecating internally. Is this essentially, is this a sound money idea in the sense that, okay, if the price of Bitcoin, let's say there's a sell-off, whatever reason, something happens and the price of Bitcoin falls dramatically quickly to, say, $27,000 per Bitcoin, simultaneously demand for UST collapses. What happens then? I mean, does the whole system collapse with that?
I think that would depend, on how the UST and how the reserve sort of worked with it, which is related to the previous question that we touched on. But what I would say is probably there is a relationship and there is some sort of backing between, obviously UST as a stablecoin and then, the reserves. But I think this would probably link to, the final details, right? Like the fine print. So whether there's a sort of a ratio in place or whether there's a sort of, some sort of buybacks or whatever that would initiate when something happens. So I think we would really have to dive deep into the fine print before we can, or rather really comment on this whole situation. Yeah.
Okay. Well, you've also been tracking donations to Ukraine. We have a chart on ETH transfers to Ukraine. Perhaps you could tell us a bit about what you've been seeing so far.
Yeah. So, I mean, first off, right, if you look at this, you can tell me when did when, which is obviously, I would say between the 1st to 3rd of March, right? So obviously that sparked a huge amount of donations. But I think something that really stood out to me was that even though the amount of USD value is increasing, right, as you can see right after the tweet, the number of transfers, right, increased even more. So obviously that's because people wanted to get an airdrop, which was supposed to happen, but did not happen in the end, of course. People wanted to get an airdrop. So what the data tells me is that there were a lot of much smaller transfers after the airdrop tweet occurred, meaning that most likely people wanted to Cyber it. So instead of, let's say, I want to donate $1,000 to Ukraine, right? What I'll do is I'll split my $1,000 into batches of 100, into 10 different wallets, and each one of them donate the $100 to Ukraine in order to maximize my chances of getting the airdrop. So I think this is sort of the meta now, right? Whereby if people are suspecting there's going to be an airdrop, or if an airdrop is supposedly confirmed, then that's what's going to happen, where people will try to spread out their money or spread out their wallets to ensure that they get the maximum potential or the maximum return from that airdrop.
Mm-hmm. Also, you saw that, outgoing ETH, it seems to be all coming from Kuna Exchange. We've spoken a lot with the founder of Kuna Exchange, Michael Chobanian, who's been working with the Ministry of Transformation at Digital Transformation in Ukraine to get that money to humanitarian aid, the military support, also incoming ETH. Where is most of this money coming from?
Yeah. Oh. So as you can see, right, we have 70% unknown, and a lot of this unknown is actually belonging to externally owned accounts. Let's say you and me, right? We donate to Ukraine.
All right. Darren, unfortunately, I think your audio is cutting out, so we can't really hear you. But we're going to wrap it there. Thank you for joining us in the meantime. That was Nansen research analyst Darren Lim. All right, coming up, crypto markets update with Hong Kong-based crypto platform OSL. Let's have a live look at Bitcoin. The CoinDesk Bitcoin price XPX index currently at $44,814. Bitcoin shooting up about 4.5%. The CoinDesk Ether price ETX index is at 3,178, also soaring over 5% over the past 24 hours. And the CoinDesk DFX, CoinDesk DeFi index is at 281, rising about almost 4% for the day.
The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Well, it's Friday. We're heading into a weekend. That means low volumes and probably high volatility. So joining us now to discuss the crypto markets is Fernando Martínez. He's head of America at Hong Kong-based crypto platform OSL. Welcome, Fernando.
Hey, how are you?
Good. How are you?
I'm doing great. Thanks for asking. Let's kick it off.
Well, yeah. So there's a lot of excitement, it seems, around this whole Terra / Luna, this purchase of this intended purchase of about $3 billion worth of Bitcoin, the ultimate goal being about 10 billion. Is that what's pushing the markets in the past few days at a time when we have low volumes happening, and yet, all of a sudden there seems to be this bit of excitement? Is that what's driving this right now, or are there other factors?
I think that's one of the factors, right? So if you take out the LFG, all the transactions that they've done over the last 48 hours, it's been over $300 million. The most recent was $125 million about 10 hours ago, and it's supposed to be towards jump, right? So they are actually purchasing the Bitcoins for LFG, right? However, if you take a look at the week, we've seen that also the equities market started to bounce back. Right now, both Bitcoin and the S&P 500 are above the pre-Russia-Ukraine invasion levels, right? So I don't think that LFG buying Bitcoin or accumulating Bitcoin is one of the only factors. I think it's a global perspective that is driving this sentiment a little bit towards the uptrend.
As I alluded to in the beginning, there's been a low amount of volume over the weekends, and yet you would have, particularly over the past few weekends, these large orders, or not even large orders, but just enough of an order to push prices a few $1,000s in one direction or another. It happens Friday 100%. Afternoon usually. So do you think that, first of all, are you anticipating that today in the next few hours? And what do you think is behind that move? Do you think that there's at least a modicum of market manipulation happening here?
Well, I don't think it's market manipulation. Certainly in a low volume environment, any sort of news such as the LFG, right? It's obviously going to move all of the retail speculators. But if we take a step backwards and look at the volumes, for example, in 2021, the average volume daily was $220 billion. Over this week, it's been trading at a range of $120 to $150 billion per day volume. However, these last 24 hours, we've actually increased to $170 billion in the last 24 hours, right? So I think volumes are getting a little bit healthier just as of these last 24 hours, right? I do suspect that this weekend we will have to take a close look at the price action. We do anticipate some volatility, right? However, we are seeing an uptick on the volumes in the last couple of hours, as I just mentioned.
And bullish macro factors to take into consideration. We have a Russian lawmaker saying that they would consider, Russia should consider accepting Bitcoin in exchange for oil to friendly countries such as Turkey and China. We have Bridgewater Associates, as well as BlackRock and Goldman Sachs thinking about crypto services, crypto funds. So all of that and that institutional interest is really interesting. So I wonder, heading into the weekend, Fernando, what are you looking for a breakout into higher highs for Bitcoin? How long do you see this rally lasting?
Well, definitely the 4,500s is the level to watch, right? We've seen that just in the last couple of hours, it's been actually flirting, trying to surpass the 44,900, right? So we definitely need to look at how today closes and towards how it's going to be opening towards the weekend. In terms of the macro or the institutional adoption, yes, there was a survey just yesterday that Goldman Sachs said that almost 53% of their clients have exposure to crypto, right? And more than 30% have actually exposure to spot, right? So those are one of many indicators that the institutional adoption is just here, right? One of the things that is very interesting, 2 weeks ago, we created a survey to over 70 institutional clients that we hold. And out of those 70 clients, 57% said that Bitcoin would serve as a safe haven during this Russia-Ukraine topic or war, right? However, we did the same survey towards retail clients. We took one of a social media guy that has 60,000 followers. He put the poll on Twitter, and the retail said actually quite the opposite. 60% of the retail investors said that BTC would behave as a risk asset, right? So if you take a step back, you see in these last 2 weeks how that sentiment has changed and how the institutional players were actually right. We're starting to see now that Bitcoin is outperforming and it's actually behaving as a safe haven in this environment.
So we'll ask more about price targets in a moment, but we have to ask about ETH and some of the alts. What are you seeing in ETH? And also, are there any particular altcoins that you have interest in and that you're watching this weekend?
Absolutely. I think, ETH will always be certainly correlated towards Bitcoin. Right now, it's been performing very, very well. But if you take a look at Luna, right? Luna has been one of the hottest topics in the last month, starting with a bet that Kwon made, right? Having Kobe as an escrow, an $11 million bet, saying that in 1 year, Luna was going to be above $88. However, since then, Luna hasn't actually been performing quite well. Right now, it's sitting at around $94. And on contrary, if you look at Solana, right, in the last week, it's gained more than 16%. So I think this last week, one of the best performers of the high market cap alts is definitely Solana, right? So Solana is something to watch right now, and we will be keeping an eye on the 110 level to see if it surpasses. Right now, it's trading roughly about 104.
We've brought it up a couple of times, the whole Luna and LFG, et cetera. What's your take? I mean, do you think that it's at least a good idea for something like UST to be backed by Bitcoin when stablecoins are used primarily in the trading of cryptocurrencies? Isn't it sort of a circular issue that could go horribly wrong if the price of Bitcoin falls dramatically, or if the demand for UST falls?
Yeah, I think that's super interesting. And I saw that you guys asked the previous host the same, right? But I think one of the interesting things about Luna is if you take a look at the last month, it actually outperformed when the market was down, right? When there was a huge sell-off, the only asset that was going up was Luna. So you might consider that the investors actually like this decentralized or algorithmic stable coin, right? And people actually are starting to believe in that, right? So if it's backed by Bitcoin, I think that just reinforces the fact that people like decentralized finance, right? But not necessarily you want to go ahead.
Yeah, it's at least part of that, the issue that you had some outside investment into it to help sustain it. I mean, how much at some point, if investors give up on it, for instance, if they lose interest in UST for whatever reason because they're not getting 20% yields on Anchor anymore, does that essentially, does that create a crisis in UST?
I do believe it may create a crisis, right? But that's one of the most important factors of a dynamic market, right? You will have always people saying that it's not going to be scalable, saying that 20% is just too much, right? But we will just have to see how this plays out. Right now, I do believe it's too early to tell. It's one of the hottest topics at the moment, right? But we still need to wait and watch and see how this plays out. We have definitely seen a bunch of interest shifting towards UST rather than USDC or USDT, right? So I believe that the best course of action right now for those that are not directly invested is just continue watching. One of the most interesting facts right now is that Luna, for example, has been relatively stable in the last couple of days, right? So as I just pointed out, it's been moving towards $88 to $94, right? It hasn't been moving towards that momentum of going back towards $100. I think the $100 for Luna is the price to watch, right? In regards to the long-term type of scalability of how sustainable Luna and UST is, right? We just have to wait and watch.
Yeah, it's a very unique innovation. A lot of it will have to depend on the management, the community. Just taking a look back at Bitcoin, wanted to get your thoughts on support and resistance and price targets, if you will.
Right. As of the last week, we've definitely, obviously broke the range that we were trading at, right? Last couple of weeks, it was super simple to start trading from the 36 to 3,800, 3,800 to 3,300. That was 33,000. That was good. Right now, we need to start seeing where the new range will be created, right? The price to watch will be 4,500. I don't believe it's going to be able to break it, right? And if so, the new range will be between 41 to 44. And I believe we're going to be staying there towards the next couple of weeks until there's a new event that drives either the price upwards or downwards, right? But definitely from a moving average perspective, right now, the indicators are a strong buy.
All right. That's the analysis from Fernando. Thank you so much for joining us. Appreciate your insights. That was OSL Head of America, Fernando Martínez. Coming up, we'll check in with CoinDesk Global Policy and Regulation Managing Editor, Nick Day.
Hi, I'm Michael Casey, Chief Content Officer and co-host of Money Reimagined. You're watching CoinDesk TV.
Time now to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk, the State of Crypto newsletter. Hello, Nick. So, India's crypto tax proposal, quite onerous, but it's now law.
Yeah, so this is reporting by our colleague Amitoj in India. The tax proposal, first introduced in February, would impose a 30% tax on capital gains, transactions with capital gains tax, and a 1% tax deducted at source. And this was pretty controversial. Indian crypto industry participants felt that this was a pretty severe tax liability. But as of today, this is now law, and it will kick in on April 1st.
Now, from what I understand, that this is quite onerous, and it's creating a bit of a brain drain in India. Will it? What will be the impact to the crypto community in India?
Well, that's the fear, right? Is that, the industry hopes that Indian crypto developers in India will want to continue launching startups and building the industry out there. But there is a fear, and, it seems to be a credible fear, that rather than operate in India, developers and entrepreneurs will instead, emigrate to different countries. Dubai and Singapore are two nations that were mentioned, and just set up shop in friendlier tax jurisdictions.
Well, it seems like India hasn't learned from its past when it taxed everyone onerously, if you will, and it hurt industry for years there. But closer to the United States, speaking of high tax regimes, Europe. And so MiCA, I guess, or MiCA, depending on what part of Europe you're from. What exactly is going on right now with that piece of legislation that's going through the European Parliament?
So this is reporting by our colleague Sundli in Italy. This has advanced. So this is part of a very extended kind of negotiating process. Different parts of the European government, the EU government, rather, not just individual nations, has to all be participating in this process. And what seems to happen is, we've now seen this legislation advance out of one committee and over to kind of the broader EU. And the important part for the industry, the part that they might find the most relief in, is that a controversial proposal to limit proof of work mining seems to be kind of dead on arrival now. It doesn't seem this is going to be included. So when MiCA inevitably passes and becomes a law for the 27 different nations in the EU, this particular aspect will not be a part of that.
So what will it have, though? I mean, like, what are we looking at with it?
Yeah, what will be the benefit, the pros and cons to the crypto industry of this legislation?
So the key thing seems to be a common license. So right now, to set up a crypto startup in any country, you have to go through that country's licensing process. You have to make sure you have, whatever the equivalent of a money transmitter license is or operating license. And you have to make sure you're in compliance with all the regulations and requirements. And, we've seen that this is a huge issue in the US, where that's a state-by-state process. In the EU, it's not as bad as that, but it is a country-by-country process. What the key thing for MiCA seems to be that it will create a common license for the 27 countries. So, for example, if you set up a company in Germany and you have the appropriate licensing, you may be able to launch operations in France without having to go through the entire process all over again.
Awesome. All right. A regulatory update from Europe and India. Thanks, Nick. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Let's check in with Crypto Twitter, our favorite place for our tweet of the day. This one from Gary Shang, co-founder of Civics Unplugged and DreamDAO, quoting Ethereum co-founder Vitalik Buterin, saying even $1 billion of capital cannot compete with a project having a soul. And he says, I truly believe this, which speaks to a lot of Ethereum.
Yeah. Hey, if AI gets its way, soon the robots will have souls. So,
oh dear.
Yeah, we're doomed. We're doomed. Run for cover.
Happy thoughts, Lawrence. That's it for First Mover. Thank you for that final sentiment. I'm your host, Christine Lee. Have yourself a great weekend. Meantime, check out the hash at noon Eastern and all of that Bitcoin at 3 o'clock. You're watching CoinDesk TV. Next up, stay tuned for the daily forecast to see what's happening in the Asia crypto markets.
After a period of intense volatility, the crypto market seems to be settling. So are investors shrugging off concerns over issues like the conflict in Ukraine? Welcome to the Daily Forecast, March 25th, 2022. I'm MiCA of Forecast, covering all things blockchain. It's been a good week for crypto markets, with Ethereum, Solana, and Cardano all making double-digit gains over the past 7 days. We'll take a look at why, plus a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Let's kick off with the latest on China's ongoing efforts to stamp out crypto mining. The country's anti-graft watchdog has warned that authorities are keeping a close eye on possible corruption behind underground crypto mining, which has persisted despite a government ban. China's Central Commission for Discipline Inspection, or CCDI, said that some state-owned entity employees have been using public resources to mine crypto. It went on to say that its branch in eastern province of Zhejiang found 48 illegal crypto mining suspects after randomly raiding 20 state entities and 36 IP addresses. And back in November, Xiao Yi, a former provincial level official in the southeastern province of Jiangxi, was removed from office and expelled from the Communist Party after he was accused of abusing his power to support mining activities. China imposed a blanket ban on mining in September last year, and the CCDI has now said that violations of discipline will be resolutely investigated and severely punished. Not mincing words there. Meanwhile, in Russia, with the sanctions hurting the economy, the country is considering accepting Bitcoin for oil and gas. Russia's Energy Committee Chairman Pavel Zavalny has proposed allowing Bitcoin or national currencies as payment options for energy exports to countries it deems friendly, such as Turkey and China. He went on to propose gold and the Russian ruble as payment options for other countries. That follows President Vladimir Putin's recent demand for unfriendly countries to use rubles for such transactions, which the European Union rejected. The price of oil has surged since Russia invaded Ukraine, with crude oil per barrel rising by 18% over the last month, while natural gas jumped 22.5%. Russia remains a major energy supplier to Europe, with some European Union member states, such as Germany, opposing the ban on Russian oil. You can find those stories and more at Focus.news. Over in the markets, after months of high volatility brought on by concerns over global affairs, including the conflict in Ukraine, crypto markets have begun to settle, making steady gains over the past week. Forecast Lachlan Keller takes a look at the market action.
After reaching a peak market cap of over $3 trillion, a series of global shocks have seen crypto prices fall roughly 40%. However, things may now be on the mend, with Bitcoin trading at around the $44,000 mark Friday lunchtime in Asia, up more than 8% over the past week. One expert told Forecast, while the volatility that surrounded global affairs has calmed down, inflation will be around for some time, and that could be positive for Bitcoin.
The hedge narrative for Bitcoin still remains true. It may not have performed as strongly as some other assets like gold in the very, very short run, but in the medium run, and of course in the long run, Bitcoin is a very high performant, non-correlated asset class.
Ethereum has also been a strong performer, gaining 12% over the last 7 days, and Miller expects more upside to come.
The merge to staking, proof of stake, is a big moment for that network. It seems to be getting closer and closer.
The merge will signal the end of proof of work for Ethereum, which should make it more sustainable and eco-friendly. In another major milestone for the industry, banking giant Goldman Sachs became the first major US bank to conduct an over-the-counter crypto options trade earlier this week. And Terra founder Kwon announced it was planning on buying $10 billion worth of Bitcoin for its algorithmic stablecoin ecosystem's reserves, which Miller also sees as having a positive impact.
The view that Bitcoin in particular can be a reserve asset, that's a narrative that we've seen, that's a longer story that we've seen over the past 12 months. Entity after entity kind of coming into this space and looking at adding assets to their balance sheet, including governments, with El Salvador and their proposed bond.
For Forecast, I'm Lachlan Keller.
And finally, South Korean crypto companies must abide by a new law from today. The country has mandated the Financial Action Task Force, or FATF's anti-money laundering guidelines, which are known as the travel rule. But experts believe this development puts access to crypto and DeFi at stake. Forecast Danny Park takes a look at how it could affect South Korea's image as a crypto hub.
South Korea's decree on having virtual asset service providers, or VASPs, follow the global travel rule has gone into full implementation today. The travel rule introduced by the FATF advises digital asset companies to collect and disclose the sender and receiver's information in any transactions of over $1,000 to counter money laundering and terrorist financing. But last year, Seoul took a further step by legally mandating the FATF's guideline for all transactions of over 1 million Korean won, or roughly $820, but gave companies a year's grace period to prepare. In response, Dunamu, the operator of Korea's largest crypto exchange, Upbit, established a solution system named Verify VASP, while the rest of the Big Four, Bithumb, Kwon, and Korbit, joined hands to build another solution system named Code. However, as each exchange can implement the law in any way it wishes, the varying rules have caused chaos for users, many of whom use multiple platforms to invest. Baek Jong, COO of digital asset banking platform Sandbank, tells Forecast that the new travel rule will leave most of South Korea's 5.5 million crypto investors puzzled, but it may not have a major impact for decentralized finance, or DeFi, and non-fungible tokens.
평소에 암호화폐 투자를 많이 하던 사람들이야 어디로 출금이 된다 안 된다 같은 것들이 이제 뭐 얘기가 나올 때마다 바로바로 이해가 될 거예요. 근데 그렇지 않은 사람들이 훨씬 더 많을 거 아니에요. 이제 혼란이 굉장히 가중되겠고 결국 그 피해는 다 투자자들 몫이죠.
Despite the uncertainties, one expert believes the travel rule will do good for the local crypto space in the long run.
이 가상자산이 가지는 큰 이제 위험성 중에 하나가 이 가상자산 거래의 익명성이거든요. 그 익명성 때문에 어떤 불법 자금을 추적한다든가 어떤 탈세라든가 그리고 어떤 그 여러 가지 불법 자금을 형성하는 데 있어서는 이 추적의 한계, 그 추적을 제대로 못해서 오는 리스크가 그래서 이 트러블룰 시행은 이제 가상자산 시장이 더욱 건전화되고 그 투자자 보호를 위한 안정장치가 좀 될 것으로 판단하고 있습니다.
For Forecast, I'm Danny Park.
And that's the daily forecast, bringing you the key updates from the blockchain world, Monday to Friday, from our vantage point right here in Asia. For more, visit forecast.news. I'm MiCA. Until next time.